This Bitcoin dip is different, not because Bitcoin is different, but because I'm different. I am a different person at a different stage in my life today than I was back in previous Bitcoin dips. And so I'm going to tell you exactly what I'm buying today that's different than what I was doing in previous dips. My name is Brian. I talk to 35 to 55-year-old affluent individuals about how to incorporate Bitcoin into their personal finances. I have a really big passion for that specific niche because that's just the niche I found myself in. I started off in Bitcoin as just loud math libertarian on the internet. I dislike fiat money. I believe Bitcoin is the number one thing in the world for the individual and for society as a whole. And I'm interested in how you can kind of embody that philosophy while also, really crushing your own personal finances at this interesting, unique time in the world. And so what's exactly different about now is back in the day, Bitcoin dips, just buy Bitcoin. Bitcoin dips, just buy Bitcoin. Just use a regular Bitcoin exchange, just buy Bitcoin. That's what I was doing back in the day. What's different now is more products exist, and there's kind of a Bitcoin, call it curve, risk curve, income curve, product curve, we'll talk about. So there's things you can buy along the way on that. And then there's also like on-chain Bitcoin versus ETF Bitcoin. And now with all those options and me being in a different place, I'm very focused on creating income right now. I'm focused on transitioning out of working full-time into more of just like managing our investments and driving income off of that. And so first off, the main thing I'm buying is BTCI. It's a 27% targeted distribution Bitcoin covered call fund. The second thing I'm buying is Stretch, which is a preferred stock, dividend stock from Strategy that targets a 10% annual distribution. Both of these pay monthly. So that's the engine of like the new income portfolio that I'm like putting together. Outside of that, also buying regular spot Bitcoin and regular spot ETF Bitcoin. So that's the entire curve. The entire curve is STRC over here, which strips out all the volatility of Bitcoin. Strategy takes on all of it and is like, we'll just have this stable. They're trying to attack money markets. We'll just have this stable fund, stable ticker that holds its price at par as close as possible, and then we'll pay you 10% annually. And they'll strip out all the volatility. They'll use it all for the upside. Then you've got BTCI in the middle. They target 27% annual distribution using covered call funds, and they don't write covered calls on the whole portfolio. So you sell away some of the upside to collect some income. And then you've got full on Bitcoin, which is the normal volatile up and down high growth asset. So where we're buying still spot Bitcoin is in our Fidelity Bitcoin savings account. So Fidelity has on-chain crypto accounts now. They offer Bitcoin, Ethereum, Litecoin, and Solana. And so I really like that they're keeping the list very, very tight. I think Litecoin's super random. Don't know why they did that. Again, you really got to encourage, if you know people that work inside fintechs and work inside TradFi, or like whenever you call customer service, really try to just encourage them, because working in finance, TradFi, fintech, all that, it's not easy. It's just not easy. Like literally every day is a battle. They are overcoming weird, wonky things. And so I don't know whose decision at Fidelity it was to sell Litecoin. That seems random to me. But I like that they're trying to create a very tight list, and I like that they have actual on-chain crypto accounts. And so inside there, I do like what I talk about on YouTube, and I just take it 0.01 at a time. 0.01 at a time on aggressive Bitcoin dips, like stacking regular on-chain Bitcoin. And then in our Roth IRAs, we try to like Roth IRAs. I'm not holding Stretch. I'm not holding BTCI. I'm holding like FBTC. So the regular Bitcoin ETF, because I want as much upside as possible. I'm 33 years old. When I go to pull from my Roth at 59 and a half, 59 and a half is a lot of years from now. And so I don't need that to be like, I don't need to be selling away some of the upside to collecting some cash to buy more shares inside the Roth IRA. Just full on, whatever happens, as high growth upside and as much volatility as possible inside the Roth. And then our HSA, our health savings account, we're kind of do a hybrid approach where we have as much of the spot ETF as possible, but then some BTCI, because that will create some amount of dollar hits that we can pull off to kind of just, defray some medical expenses from our monthly budget. And so that's a little bit of a cash flow play there. But That's the way that we're using the entire Bitcoin curve and across our different accounts. And that's why it's different than before. Before, it was just simply when our personal finances weren't that complicated and it was just like we had a checking account and then we were buying Bitcoin on an exchange and that was our savings account. That's what it was. But now we've got accounts spread across a lot of different places with a lot of different goals. And so we're building our main income portfolio, which is going to start to replace W-2 income and start to give us a lot more lifestyle flexibility than we've had before. And then we've got our Roth IRAs, as much upside as possible because we're 20 plus years away from pulling those out. And then the HSA is the hybrid. And so that's why it's different. And that's why I really like this time period that we're at in Bitcoin, because wherever you're at in your personal finances and in your Bitcoin personal finances, you can find something now that fits that exact thing. And so kind of on that note, I would encourage you as you're like prepping for things. I love Thanksgiving orange pilling. And so as you're prepping for those conversations coming up this holiday season with your family, like understand the whole suite of products and be ready to talk, like just be ready to kind of meet them where they're at and be like, hey, totally understood what you were talking about your investments last year. Like it's really cool. They've made a lot of innovations on this. And I think this blend of Bitcoin with income, with growth could like fit your lifestyle. I'm really interested in just kind of how the Thanksgiving orange pilling goes, this year. And then here's the other thing. This is different than the past. I don't know if Bitcoin has topped or not. I don't know if the bull market is continuing or if the 4-year cycle is over. I've kind of always had a blind spot to that, to like really being able to call the cycles very well. And so the way that I handle it personally is I just have a personal goal of making my net worth go up. So that's what I'm focused on. I'm focused on making my net worth go up, and then I'm focused on making my daily reality enjoyable and repeatable. Those are the two things I'm focused on. And what's good about that is neither of those outcomes or neither of those goals require Bitcoin to go to 500,000 tomorrow. So I'm not like frantically being like, oh my God, Bitcoin is now at X. I need to go all in because then boom, in 180 days, my life will be so easy when it does. Like in my opinion, like that is not helpful. And so I try to not have that as much as possible. What I'm focused on is, again, understanding the risk curve of all the different products, Bitcoin products that are out there now, and the way they combine growth and income. And what's good about them also is covered calls. When you're selling away upside, that has the potential to outperform regular Bitcoin in downturns. And so when people, like, in that sense, I'm actually more prepared for a downturn than I ever have been, because you own different blends of Bitcoin products across the spectrum. And so that's what's different about this time, is that I don't need Bitcoin to hit a certain price in order for me to feel a certain way. And collectively, the world doesn't necessarily need, Bitcoin holders today don't need Bitcoin to hit a certain price for the world to start paying attention or whatever, because the world is paying attention. More people than ever are paying attention, and they're getting allocated to Bitcoin. Like it's literally happening every day in real time. And so that's the way that I'm preparing in case Bitcoin has topped or whatever. And it's kind of just a double benefit of what I'm doing anyways. Oh, and here's what I'm not buying. I'm not buying random Bitcoin treasury companies. I'm not buying random other active mutual funds or active ETFs that employ strategies that I don't understand. I'm not buying funds that have like less than 200 million assets under management and were just launched, less than 12 months ago. I very specifically curated that list of STRC, BTCI, and then FBTC, the Fidelity Bitcoin ETF, on purpose. And I can explain each one of those pretty decently well, and I can explain the reason why wrapping them together fits exactly the objective that I have. And I'm also not buying random growth stocks. Like Bitcoin is the growth thing for me. So I'm not buying the S&P 500. I'm not buying the NASDAQ. I'm not buying Tesla. And I love Tesla. Like we drive Tesla. I've got Tesla Powerwalls. Like I still love these things. and I'm bullish on like the American economy, like don't bet against America and whatever. Like I'm pro all of that, but I also don't need to own stocks generally, because to me Bitcoin is almost like the index fund of the world. Like it is the liquidity trade. And the stock market is just based on flows. Like it's purely, in my opinion, mostly just based on the flow of money. Like people just mindlessly contributing to their 401ks and just like buying the index, like the index. The S&P 500 and the NASDAQ are used to store wealth and store labor, because USD, the fiat currency, is not good at doing that. Like home values, interior square footage, 30-year mortgages to buy interior square footage is to protect against the US dollar not being good at holding its value. And so that's why I don't need to own like a basket of stocks, because this Bitcoin profile curve encompasses all of that. And just because we're now in the pontificating, Bitcoin treasury companies are going to have to issue dividends the way that Strategy is issuing dividends, in my opinion, to attract people to those companies. In my opinion, every company is going to have to start like paying dividends. Bitcoin being the number one growth engine in the world and like attracting all the liquidity and making it simpler to just own the main liquid growth asset will then make companies and actual cash flow machines have to pay for you to help them also create cash flow, when Bitcoin itself, by appreciation is just creating so much cash flow for people. And so yeah, that's a little bit of pontificating there at the end, but that's exactly what I'm not buying. I'm not buying random individual stocks, even if they're Bitcoin treasury companies, and I'm not buying active ETFs or active mutual funds that have like futures based or any other kind of like strategy that I don't understand. If you made it all the way to the end, I think you would really enjoy being a channel member. It's a few bucks a month and you can cancel anytime. You can get members only live streams, join our private Discord chat for members of this channel. It's called the Bitcoin Personal Finance Think Tank. And so really trying to bring together people that are evolving the way that they incorporate Bitcoin into their personal finances. We have growth people, we have business owners, we've got real estate people, we've got people that go hard on dividend funds. And so it's a really good mix. Click join right next to the subscribe button and we'll see you on the next one.